It's time for the Monday market update. The Fed recently cut the overnight rate by 25 basis points, which was widely expected to be exactly that, but the interest rates went up. So we talk to buyers all the time who reference the Fed meetings as, well, isn't the Fed going to cut the rate? Won't that lead to lower mortgage rates? And I've talked about it here before, it doesn't always work out that way because the expectation is what truly matters to what mortgage rates do, because they are traded on the market as bonds, just like stocks are traded. So all of those investors are making their decisions based on what they think is going to happen in the future. And the reason the rates went up is because the expectation was for this cut, but the future expectation was for more cuts than the Fed came out with that they are thinking are going to happen between now and the end of the year, and then even going into 2026. So the future outlook, because of the poor jobs report, the higher unemployment, and stickier high inflation, has led the Fed to say, whoa, we're not just going to keep cutting these rates over and over. We've got to get things under control from an inflation perspective, and we've got to get back to full employment before we can really decide to cut these rates more. And usually the cutting of rates is to spur the economy. Well, right now we're kind of looking at this weird higher unemployment with higher inflation, and they're trying to avoid a stagflation situation. So keep your eyes open, ears to the ground when it comes to the Fed's decisions and what they're talking about, because again, the expectation of what they're going to do is what's going to impact mortgage rates. It's going to impact those buyers' monthly payments. See you next time.